And I guess we're live. Hey guys, welcome to the space. Today we'll be discussing Bitcoin as beyond the store of value. And today we have a great set of speakers that are all building products on the Bitcoin ecosystem. So we'll be discussing the different drivers of adoption for Bitcoin more than only a store of value, but also a means for DeFi and financial primitives. So thank you very much for your time, guys. Diego just joined us as well. Welcome, Diego. So maybe we can just start
Pleasure.
with a quick round of introductions so everybody knows who do we have here today with us. Maybe we can start with Charlie. Charlie, you wanna give a word?
Sure. Yeah. Great to be in the podcast. Thanks for Keyrock team for the invite. My name is Charlie, co-founder of Bitlayer. I've been in the space since 2014. Bought my first Bitcoin in 2013 in Amsterdam. Got involved and get to know the space because of Ethereum. Was early contributor for the Ethereum ecosystem community from Berlin. Deep dive on Polkadot since 2017. That's kind of my first major involvement. Helped them on the ecosystem growth for 3 years. DeFi summer came, moved back to Ethereum. Joined Polygon as the Hayback lead for 1.5 year last cycle. Brought like around 600 projects to Polygon ecosystem and quite a few like Web2 major corporates as well. Ordinals, Orange Pill myself, being deep dive on Ordinals. I was one of the early educator about what is Ordinals, meta protocols, BRC20, all the primitives. So Bitlayer started 2 years ago. We, as one of the first BVM research and engineering team, being deep dive on BVM solutions, and as one of the founding members of BVM Alliance, and currently building our BVM Grass 16 verifier, BVM Bridge, and a few other ecosystems along the ways. Yeah.
Thank you very much for that, Charlie. It looks like you went all the way around back to building on Bitcoin after testing a lot of different things. That's great. Thank you very much for that. Maybe we can continue with Diego as well, as also one of Rootstock, one of the first builders in the Bitcoin ecosystem already for quite a while. Diego,
Yes.
you want to give an intro?
Yes. On a personal level, I started in Bitcoin actively, creating Bitcoin communities in Argentina and Latin America in 2012. So as part of that, and living in Latin America, I realized Bitcoin as it was not enough to serve people who were living day to day, week to week. So we need to extend Bitcoin capabilities, and we were discussing that at the end of 2014 with Nick Szabo. That led to a conversation with Sergio Lerner, the chief scientist and the brains behind Rootstock. And with that is that we gave birth in 2015 to the white paper of Rootstock with the idea of expanding Bitcoin capabilities to have full smart contract capabilities, but retaining, full alignment with the Bitcoin ecosystem, both on the monetary part, making Bitcoin the native asset of Rootstock, and also by merge mining. So every transaction on Rootstock creates transactions fees for the Bitcoin miners. I think Nick Szabo got excited when we shared the white paper and he made it public. We were like kind of in stealth mode, and that pushed us into the into the wild. And then in January 2016, we did the first round to do this. And in January 2018, Rootstock became the first sidechain to Bitcoin in production. So yeah, and now I think it's all under the Bitcoin L2 concept. So I would say we built the first Bitcoin L2 in production. No, it started with 5% of the hashing power of Bitcoin, and last month reached an all-time high of 87%. And so the vision is still the same 10 years after, 10 years later. But I think now the momentum and the understanding of the ecosystem has grown. At the beginning, we were a little bit fought back. And also our understanding of technology has grown in the sense that A few years after we launched the Rootstock idea, we started talking about a third layer on top of Bitcoin that was an off-chain layer that could scale Bitcoin. No, that's the Reef project. So very exciting moments, to be honest. It's like I see the beginning of Bitcoin mass adoption to kick in some ways, and I see all the technology and all the development that is happening on Bitcoin. So I'm very excited. It's a
Yeah.
dream coming through, coming true.
Absolutely, it's definitely an exciting moment, and I'm definitely looking forward to get your take on the different drivers of adoption at the moment. Just before we go into that, maybe we also have Jonathan, our third speaker today. Jonathan, you want to take the mic?
Sure, sure. Yeah, really humble and privileged to be here, right? Thanks for the invitation. Happy to be here with Charlie and Diego, all the OGs. So on the personal note, I was orange pill in 2019, but prior to that, I was in Web Zero. I wasn't even in Web Two, right? I was actually with oil and gas industry with Royal Dutch Shell. So it really piqued my interest in terms of how Bitcoin don't ostracize anyone. As long as you believe in the technology, you believe it's a class of change, you believe in the financial energy, right? And the power of people, that's where you can join, regardless of all walks of life. So went full on crypto in 2020, uh, speculate into assets, go into NFT, started a gaming guild, maximum of 3,000 people during the peak, and then went down together with Terra and FTX, etc. And then I got into venture studio, helped a lot of projects to incubate, and then here I am as the head of BD and partnership at Merlin Chain. So it was really quite a great ride and journey with all this amazing emergence of technology and how things have shaped in such a short time, right? So for Merlin Chain, we are a Bitcoin layer 2 that is committed to empower Bitcoin native assets like runes, ordinals, bitmaps, projects, builders on layer 1 to come to layer 2 to scale and to grow. Before Merlin Chain, the team actually built on layer 1 itself. So we have assets like BRC420, bitmaps. We built a bitmap explorer. And then in 2023, we witnessed the surge in the activities and traffic on layer 1. So things are going congested, expensive, slow as well. So within layer 1, I mean, block space of 4 megabyte, speed of block time of 10 minutes, right? So it's really slow. So scaling solution is an inevitable route. So Merlin Chain took shape last year in January on our testnet. Within 2 weeks, we went on mainnet. We started I would say, quite a hype TVL campaign. At the maximum, we had $3.9 billion of TVL peak in March last year. So over this like 1 year plus, we have witnessed like a bridging of like around 28, $29 billion worth of Bitcoin assets, native assets across chains. We also have over like 2 billion spot trading, over 2 billion perpetual trading, and then we have around 3 million unique addresses. Right, so we see ourselves as a way to bridge all this Bitcoin liquidity, Bitcoin native assets to the wider DeFi opportunities for everyone to use. So happy to be here to share more later on. Yeah.
Thank you very much, Jonathan. So I guess it starts to become apparent that we believe that this is an inflection point for Bitcoin and the adoption and the use of Bitcoin for many different use cases. When we and I want to get the take that you have on the different drivers of adoption. I mean, when we look at what happened in 2024, I think it's safe to say that it was a breakout year for, I think, like what Diego was saying, is being aggregated under the concept of Bitcoin layer twos. We had more than 20 new Bitcoin layer twos launch over 2024 alone, with a massive surge in TVL. Hard to really understand exactly and quantify how much of the TVL is considered to be in the Bitcoin chain and how much is not. But in any of the case, if it's Bitcoin assets elsewhere or assets in the Bitcoin chain itself, definitely the growth is enormous, with a sevenfold growth over the year. So with that context in mind, I guess I maybe like to get into the topic, which is to get your take on what does the search of TVL come from, and what do you think are the main drivers and reasons why people would want to use Bitcoin DeFi compared to, I guess, the alternatives that we had for quite a while now with Ethereum layer twos, and let's say Solana for the greater extent. I don't know. Maybe Charlie, you wanna elaborate on that topic, as you have seen a little bit of everything.
Yeah, for sure. We've been actually talking to other non-Bitcoin ecosystem as well with our Ethereum bridge integration. So there's a couple of things, right? So first of all, the definition of Bitcoin DeFi L2. Bitcoin L2 was definitely a gold rush. It was simply way too many teams. A lot of them actually stopped operation as well. A lot of them pivoted. A lot of them start doing other things along their journey. I would argue it was more than 70 team the Q1 last year. In Q2, it became less than 20. Altogether, I think there's only like around 10 L2 ecosystems still have interesting active use cases and daily active users with like over 10, no, 8 figures of TVL. A lot of them don't have like a lot of them don't have 9 figure level of TVL and real pretty interesting organic kind of use basis. So that's that. So I would say the Bitcoin L2 ecosystem, if we kind of categorize as a category, it's still very young, right? It's kind of like 2020 or even 2019 of Ethereum in a way, right? Ethereum started in 2014, but yeah, right. But I think all the way from until 2020, there was no real adoption, right? Like ICO is kind of just bubble. 18 was a bear market. 2020, the DeFi really kick off a lot of the real stuff, right? Whereas Bitcoin, it's 15 years now, but Ordinals was a very interesting catalyst. But I would argue a lot of the Ordinals was just like garbage UTXO. That's kind of the whole point. Why we need a scaling solution, for Bitcoin, right? Because we can't just keep burning our hard-earned Bitcoin, creating all these on-chain garbage UTXO. It's got kind of always floating around because there's no burn mechanism on that as well, right? So that's kind of our whole argument why we need a Bitcoin scaling solutions. But I think the key difference we want to emphasize on Bitlayer size, while building our verification is Bitcoin finality. If the state transition is not verified on Bitcoin block, only just set on Bitcoin on a side chain. So there's two difference, right? One is security level. It's not Bitcoin security, right? It's only just sidechain validation security. So the second part is what are the fees we are contributing back to the miners, right? And the merge mines in one way. The second way is actually having actual verification or bridging fees and sharing as a revenue stream to the miners. So that's kind of the key angle we're looking for. We work with actually a few top mining pools. We recently just had an announcement. F2Pool, Endpool, and Spider Pool is actually becoming our Vivian Bridge operator and also investor. I think that's a very important question collectively, right? For everybody building in the Bitcoin space, we have strong consensus on Bitcoin as assets. We want to make sure for a very strong consensus for Bitcoin as a network. We want more people to use Bitcoin. We want more transaction happening into the mempool. So there's actually fees to be paid to the miners, not just the mining reward, but also additional fees, right? So all of those was a good season, but it was short. Miners had some interesting benefits, but they actually wants to know what's the future revenue stream for them, right? Like 2 or 3 halving cycles down the road, can they actually have enough security budget to maintain the operation, to keep contributing the cash rates and so on. I think that's kind of the part we need to actually build this ecosystem together. Back to the second part of the question, right? The Bitcoin DeFi. I have a hot takes on Bitcoin DeFi because there's a lot of the yield of TVL surge was basically points or some fake TVLs or whatever incentive program. I think it actually worked for a certain period of time, but it died down very, very fast. It's faster than people thought, right? And I think that's not the future how it look like for Bitcoin DeFi. We need looking for real yield in a sustainable way, and not just playing this Ethereum DeFi, pumping the TVL with point system incentive model, floating from one layer two to the other kind of thing. It happened in Ethereum already. I personally experienced that with Polygon, and things became very bad after the incentive program finished. Right, it happened a lot of other Ethereum L2 as well. The whole fragmentation of liquidity across over 200 Ethereum L2s. I don't think it's going to be something we want to see in the Bitcoin space. I think it will be sad. Ethereum people made a lot of mistakes in the last 7 years as being a very failing assets, very underperformed compared to Bitcoin. And the ecosystem has a lot of problems in terms of all the dynamics between the L2s and L1s. So as Ethereum, as an ex Ethereum, I do not want to see the mistakes happening in Bitcoin again. It's going to be such a waste of resources, the money, and the time. And Bitcoin is a very important holy mother chain, so we should do better than that, right? So I think for Bitcoin DeFi, it really comes down to what are the real use cases actually can provide reasonable yield, not 50%, not mention even 200%, like just like the crazy DeFi summer 2020, like for the degens to farming from one after the other, but have sustainable, reasonable yield, but actually real yields, not just incentive campaign one after the other, right? For the Bitcoin allocator. And also a lot of Bitcoin people has been saying, I don't need any use cases because they just want security, right? I think more and more demand is coming along the ways while people still being a naysayer. And so it's an interesting decentralized ecosystem. We're gonna see the demand and supply having some interesting equilibrium. So yeah, that we've been kind of building and learning along the ways. Yeah.
Yeah, honestly, very insightful, Charlie. Thank you very much for that. And I think I'll take you on that, and maybe to go to the rest of the group. I mean, I think that you're making a very good point on the fact that we need like real yield and not make the same mistakes that we did in the development of other ecosystems. And I know maybe I'll take you, Diego, on this one. That at Rootstock you guys have also started to experiment with like implementation of real world tokenized funds into the chain, as well as trying to understand how to bring stable coins in within the ecosystem of Bitcoin. Maybe you can elaborate a little bit on how are you trying to build upon building these use cases.
Yes, I agree with Charlie on many aspects. That it's like internally when we define the growth strategy of Rootstock Labs grow through others because we are creating an ecosystem. It's not that we are building then solutions, but what we are doing is like helping others build on top of Rootstock and understanding what are the limitations, the frictions in the ecosystem, the pieces that are missing, and putting that together so others can build solutions. And internally, I always make this distinction between attraction tools and consolidation tools, or retention tools, if you want. And the main difference is what Charlie was saying, is like you can create yield, artificial subsidized yield, to attract new people, because basically this is a cycle I've seen in Bitcoin. is like people get for the money because usually they get when there's news about Bitcoin going to the moon and so on. Then when people is in the Bitcoin ecosystem, we see that in the communities, some of them realize the true value and true potential of this for the long term. That is not it's not an speculative move, but has long-term, impact on society, and they keep. And then when crises arise, is when the true value of Bitcoin is demonstrated. No, but we have that cycle. Like people will always come, I would say, for the money. That's. I mean, we need to be honest, and that's how it's been. But the way you build that. So you say, okay, I understand this subsidized yield or whatever is a tool to attract people, but then I need to think how, I will create tools that are sustainable, that can run and scale, because subsidized tools cannot scale. No, they are limited in nature by design. So how you make that organic yield? So a lot of what we do in our organization is identify sources of yield, that are real, that have real sources of business needs behind, and find partners that are working on those to help them deploy their solutions on Rootstock. No, so that's one thing. And you can say, for example, one example that was depicted: Lightning nodes, they need capital, they need working capital to operate, and they are paying around like 3% per year. So you can say that's one way of doing it. So you are deploying capital that is fulfilling a function within a business ecosystem, enabling payments, for example. Then, I don't know, lending to ETF, to institutional investors as well, because they need short-term lending in order to fill their positions while they buy on the market. Another case, those are real yield, like somebody's willing to pay that yield for borrowing Bitcoin because they are building a business. And you have the same thing on dollar economies. No, a remittance company needs working capital to settle their flow. So how we plug in this DeFi ecosystem into the real businesses of the world, that's the challenge. If we manage to do that, and that's how I see DeFi on Bitcoin, as the bridge between the traditional world economy and the Bitcoin capital. No, and that was always the vision of Rootstock. Rootstock being a bridge between those two worlds. What this thing I was saying is like, okay, perfect. Bitcoin is an amazing tool, but until the hyper Bitcoinization comes, it will only be for people who can store value for 2-3 years or more. So people who live in shorter time horizons, like financial horizons, need to have tools like stable assets, like lending, like borrowing, like payments, and how we use the Bitcoin infrastructure, the Bitcoin security, how we use Bitcoin as a store of value asset, as collateral to enable that short-term economy as well. No, and that's what we are working. I see that we need to find out how to do that. I think in Rootstock we have a thesis. I wouldn't say that is working because people is using dollar on chain. You were talking about the stable assets. We have the first stable asset backed by Bitcoin in existence. That is dollar on chain, run by the money on chain protocol. It started in 2019, has survived two major crashes, 80%, 50% crashes of Bitcoin, and so the protocol is very sturdy.
Again, it may as well be the algorithmic OG coin, correct?
It is. But it's designed with safety in mind. It's not designed with speculation in mind. And that's the other thing, is like, you need to understand that speculators, they are a needed part of the ecosystem. It's like, because the speculators are willing to absorb risk and to take that risk. So the people who is in the utility business, on the, what I was saying, no more like the business, the traditional business or utility business provision, can operate with conditions that are more certain or predictable. So in a way, the speculation and the utility part of the economy are both necessary. The thing is the balance. If you had, like you had in the Ethereum DeFi for many years, the degens, where like everything is about speculation and there's no like underlying value, then we know what happens when the faith or the hype finish, then everything goes to zero. So, but if you manage the speculative interest with the utility interest and you make them both growth in harmony, then you have, the example I give is the cappuccino. If I give you a cappuccino that is 90% foam, 10% coffee, you will say, Dieguito, you're scamming me. It's like, but if I give you a 70% coffee, 30% foam, that's an amazing beverage. So that's the thing. It's like how much foam we are putting into these systems, how we are making sure that the foam is an attraction mechanism, no? The cappuccino.
The cappuccino ratio, the right ratio. So 70-30, that's the right ratio.
Well, that depends. Some people will say, 20-80. That's the other thing. Is like there's some leeway, but definitely 90-10 is not going to work. Also, 100% coffee is not attractive for most people. I like black coffee, but most people will say, no, give me something else. Give me some foam on it. So that's a little bit of what we are learning. The good thing is but Bitcoin as a store of value has been validated, because that was a little bit of what Ethereum was challenging for a while, since 2017, where I know the flippening was pushed by certain actors. So I saw that happening in Consensus in New York. I saw that push to create that narrative around the flippening. And now we are going back to the foundations. It's like Bitcoin is the ultimate store of value, which doesn't mean that Ethereum and all the smart contract networks and other networks don't have value to contribute to society, but it's in a different function. No, so it's what we are trying to do is saying, okay, same with Bitcoin L2s. It's like some are just, as we say, as Charlie was saying, hype driven. They moved to other, they didn't understood what they were building properly, and they moved to other businesses. They are out of business. But a lot of those Bitcoin L2s will provide value, what we need to find is which will be the function within this broader ecosystem that I call the Internet of Value. Each one will play, So there's room for everybody, because if Bitcoin is going to be the store of value of the world, and we are going to build the financial system on top of Bitcoin, then it's huge. It's like we will have asset tokenization, both collateralized by Bitcoin, collateralized by real world assets. We need to create, the secondary markets between that. We need to create the lending and borrowing engines. And why is basically because we are in a bigger move, like that is like moving counterparty risk and into platform risk. So what we are doing is replacing counterparty risk for platform risk everywhere we can, whether it's like, blockchains, protocols running on blockchains, but it's like replacing intermediation with programming, no?
Yeah, absolutely. I'm gonna take your take, Jonathan, on this, because I wanted to understand from what I know, a lot of the use cases that you guys have successfully built at Merlin as well also fall into the speculative side of the spectrum, correct? So maybe tell us a little bit more about like how you guys looking at that part, and how much, what is the percentage of the cappuccino that is from here?
Very cool. Yeah. So on Merlin chain, right? Because we started off as a builder on Bitcoin layer 1, right? So we have BitMax, BRC420. So in fact, we have like around 80% of the Bitcoin native assets holders, they are on Merlin chain. So we are actually very supportive of let's say the BRC20, BRC420 and the Runes community, right? Even for Arjun Seti, co-CEO of Kraken, he's looking into BRC20 right now. It provides a very good design space up for Bitcoin right now. So in the past, people always already somehow concluded that Bitcoin is a finished software. But right now, we are able to see that there's more to that. So hence, Merlin Chain motto as to make Bitcoin fun again. We want to enhance Bitcoin functionality. We want to make it fun for mass adoption. We want people to think about Bitcoin layer 2, right?
Did you
So
say
we have
fun?
all this
You say
hype.
Fun. Make Bitcoin
Bitcoin
fun.
fun again.
Okay,
Yes, to make Bitcoin fun again.
it's cool. Works. I
Yeah,
like it.
that's our vision and mission. Yeah, because we see huge like institutional confidence and participation in this cycle, right? So institutional buy-in, Meta Planet strategy, non-stop. So what's next? And then people will be thinking about having this yield-bearing part on Bitcoin. They do not just want to passively hold Bitcoin anymore. They want to have something more than that. So if they can, let's say, inscribe ordinals or BRC20 on why not? Or if they can stake BTC on say on other RRT and get you on top of that, why not? So for Merlin Chain, we want to support that idea. So at the start, we did a TVL campaign. So users take Bitcoin and then we actually wrap it on layer 2. Because on Bitcoin layer 1, right, there's non-Turing completeness, right? So we have to synthesize it and wrap it. It's something like WBTC. So we name it MBTC. So right now we have around 15,000 MBTC that is bridged across to over 20 plus chains. So in this way, we want to motivate holders, users to explore more BTC-Fi opportunity in that sense. So if you look at MBTC opportunity, you can actually do yield farming on Taiko, you can do yield farming on Say, you can do yield farming on TAC, etc. So we expand the playing field for users, making Bitcoin fun again, of course. And then we also support projects that want to build on runes and ordinals. Right, so we talked to BitBoy. They are building like real world gaming devices, integrate all the verticals on Bitcoin. We
Can
talked
you
to
give us Can you give us some examples
unicorns.
of these fun use cases?
Yeah, sure. So there's this launch pad. It's called BTC.fun on Merlin itself. It allows people to essentially launch runes on layer 1 and then bridge to layer 2. So this project actually launched last year, November. And then we see that there was initial strong hype in the first token that's called Party. So it reached like 36 million market cap, 30 over 1,000 holders within like 36 hours. So this Runes token is right now tradable on BTSE centralized exchange. I mean, this is a small step, but we are really optimistic that it can reach further. It's something like dog go to the moon, right? Where Dog token is right now being spotlighted by Kraken and then potentially onto tier 1 centralized exchange. So this is I would say a good step. As what Charlie mentioned, right? We are at a very early stage already, right? So last year there's a lot of L2. We see that 2024 has been a deafening years. The bad actors and all those without a proper PMF, they got sieve off. Right now, the one with conviction, with strong community, they stays and they build further on, right? So like Rootstock, like Bitlayer, and then we want to further on forward that case. So having users to launch runes is a good starting point, and then they can trade it on Merlin chain. They can essentially land it in the future and stuff like that. So if you look at Dog Go to the Moon, you can actually borrow or lend a Bitcoin against all these runes on Liquidium, even though it's on layer 1, but eventually it will end up in layer 2. So once we have all these dApps that interoperate with each other, expand across chains, we will see more and more growth in that BTC-Fi or ordinals or runes, right? When more people have their hands in, skin in the game, bootstrap together, I think it can grow a lot. So to give you an example, like South Protocol started off from Merlin chain as when they pivot to BTC, South BTC. Right now they're on various chains, and then they have been one of the very prominent figure within the BTC-Fi ecosystem. Avalon started off as a lending protocol on Merlin chain as well, and now they have expanded to other chain as well. So with more dApps expanding, creating more use case on other chains, and then while furthering this MBDC liquidity to them, we can have more playability. We can have more like strategies around, right, in seeking a better yield. Then you can start to have a protocol that have U aggregators. So right now on Merlin, we also have an AI agent tool that help to navigate users to the best yield place. So if you go to Merlin website, because we know that there's so many projects out there, UI can be clunky. So we want to have an AI agent that can help to navigate users to seek the best yield to do on-chain transactions. So these are the various tooling systems that we are trying to enhance this idea of BTC-Fi, right? So they do not know where to go, the AI agent guide them to go. And then with all these BTC-Fi projects on various chains, they are able to, get a liquidity, get the users, get the playability, have different Legos on top of each other, and then you have more scalability and sustainability in the future. So we have been always committed to push all this out.
Okay, thank you very much for that. I think very
Okay.
clear, interesting to also see all the use cases. Of course, it's hard to understand how much of that would still, as as we were discussing before, like be able to generate retention, correct? And maybe shifting gears, I'd like to maybe enter into that topic. When we look at the Bitcoin economy and Diego, you were mentioning really real use cases of Bitcoin as if it was the stable asset. One of the things that have been challenged about the usage is that maybe Bitcoin is a victim of its own success, and that the fact that it's now actually proving its value proposition as store value also contributes to people putting so much value into Bitcoin that they don't actually consider that the smart contract risk and platform risk, as you were mentioning, is worth the possibility of losing their Bitcoin. And what we see is that when we look at the data, the amount of TVL in let's say Bitcoin layer 2 and Bitcoin DeFi is growing, but the activity still lags behind compared to TVL massively when compared to other chains. And how much of it do you think is just the fact that people actually don't want to spend their Bitcoin and the risk associated for them to take that action is just too high, and maybe they do actually see value on kind of like saving Bitcoin, spending dollar instead of the other way around, correct?
I think depends on the Bitcoin user type. No, it's like, but by my projection when we designed the Rootstock economic model was that 3 to 20% of the Bitcoin value was going to secondary layers, not to Rootstock. But now that we have others, I think we are competing in that space. But conceptually, like 3 to 20% of the Bitcoins were going to be like willing to engage in more complex operations. And so
That's
that's
still a
why,
pretty big assumption, correct? You're assuming 70% of people would just prefer to not touch it. Like they would not want to
I
take
mean,
the
that's
risk.
the worst case scenario, no? 3%, like saying, it's like where, if you think in risk models, it's like the same thing that with early Bitcoin adoption in corporations and everything, they were thinking like, oh, okay, 3% is something I can allocate. If I lose it, it's not a problem. So addressing, but I think that will go evolving, over time, because again, platform risk and counterparty risk is very different, because counterparty risk, the more money the counterparty has, the longer it's been running, the more chances of failure you have. It's like, it's like that billboard on the factories, no, like X days without incidents. No, it's like you're waiting for the incident. It's like you're saying, okay, it's 1,000 days without an incident. In the case of platforms, it goes the other way around. It's the longest and the more value a platform has at stake, because it's an open system. Everybody's trying to hack it. So past certain moment, basically it's very reliable. Unless there is like a big change in environment, that platform is reliable. And with EVM and any general purpose system, that's the case, that the hardening is done, by time, operation, money at risk. Is not done, hardening cannot be done in other ways, because the surface of attack is unknown. It's like, that's why Bitcoin decided, when we signed the Bitcoin stack with Rootstock on it, it was part of the elements we were assessing. No, it's like you have this trilemma where security, functionality, and scalability. This is not the academic trilemma; it's my trilemma. It's like, but basically, the functionality and scalability are at odds. So if you want to scale more, you are sacrificing. In the case of the centralized network, centralization. So you are sacrificing decentralization. You make it more centralized, therefore it's less secure. If you want more complexity in your programs, and you want Turing completeness, the richness of a programming language, then your surface of attack with a few lines of code becomes unknown. It's like you have so many possible routes within that program that you can not like walk all those paths. That's why Bitcoin sacrifice both things, sacrifice scalability. You can only process around 1 million transactions per day, and sacrifice functionality. The programming language of Bitcoin is a push down automata. So basically it doesn't have logic forking. So you cannot have logic, and doesn't have recurrency. So by sacrificing those two things, it made scripts that have a surface of attack that is known. So they maximize security for the sake of functionality. And therefore, what we are doing is like building layers that do different trade-offs. It's like every layer that is on top of Bitcoin is less secure than Bitcoin, but has more functionality, has a slightly more scalability. And in our view, we also need off-chain layers, non-blockchain layers, because Rootstock is a blockchain layer that will scale. That's the concept of the Rift layer. So in my view, from a utility perspective, high security, like maximizing security in that trilemma, is what you need for a store of value. Maximizing functionality and doing some trade-off on the other two, on security and scalability, is what you need for economic coordination. That's layer 2. Ethereum put those two layers in one. And then, peer-to-peer off-chain exchanges signed with cryptographic keys is what you want on the scaling layer. That scaling layer will use the second layer, the economic coordination, for dispute resolution and settlement. And that's what we are seeing now. Rollups do exactly that. It's like now that original view is becoming a reality in terms of architecture.
What level of yield have you seen that Bitcoin holders start to react to start taking like platform risk and moving to testing these protocols and these systems?
I think now, we know that historically a yield with counterparty risk, a yield of 3% was like what what's being offered. Some platforms that are more conservative are giving like half percent. So that's the historical, like what there's somebody willing to put their name back in that. I think with short-term lending of Bitcoins, I think it can be a little bit higher, maybe 4%. But then people, of course, is being attracted. Now you have offerings that are, again, non-sustainable because they are like using minted tokens to support it, but we know that's not going to last for a long time, and that go into 7, 9. But also people who has been in the space for a while, they say, 7, 9, we know there are no like sustainable sources for that. So I know I'm taking risk. So I would say something around above 4% is attractive, but it starts making questions in the head of people. But now with all this Cambrian explosion of Bitcoin L2s, you have offerings that go beyond that. But in the organic yield that Rootstock has, for example, money on chain protocol, historically is not fixed yield, but has given like on average 4% for something percent. And that protocol is basically how it works is a long position on Bitcoin versus positions in dollars. So the depreciation of the dollar versus Bitcoin is what creates the yield. So that's organic, sustainable. That works. I think on the Lightning nodes, they were talking about 3%. That is like working capital for operating the Lightning hubs, the payment hubs. So that's also sustainable. Short-term lending for institutional operators, I think it's 4% is what is available to the public. Maybe internally, the ones structuring these products can have a little bit more. So
okay, no, honestly, very, very, very insightful. I think it's interesting to understand the levels of yield. Maybe going to Charlie. I mean, I know that Bitlayer has been growing very quickly as well, and maybe interesting to get your take on what do you think are going to be the main primitives that are going to continue to help to scale this opportunity and drive that adoption. I mean, I know that you're also working on money markets and you have your own levels of yield. Maybe interesting if you can discuss and compare that to the levels of yield that you see and that Diego just mentioned.
Yeah, I think Jonas and Diego covered quite a few, the kind of the normal user suspects use cases, right? We start from DEXs and then lending. Then I think all these staking protocols we saw from last year, like Babylon was one of them, right? There was a huge hype around that and also high expectation. The result was a bit frustrating, even disappointing for people after the withdrawal. It was less than 2%, even less than 1% for certain stakers. I think the Bitcoin DeFi space in terms of use cases and also the yield sources and so on is moving to the next chapter of exploring higher frequent kind of trading protocols. So we categorize like different use cases into different level of frequency kind of way. So Bitcoin staking is like the low frequent way, right? Lending we can categorize as battle test adopted, but also low frequent as well. If you do lending, you don't interact with your protocol every single hour, right? Whereas when we talk about the new type of frontier of use cases this cycle, Hyperliquid is a very good example, right? We're talking about high frequent, high performance, require high level of scalability kind of use cases. We're talking about thousands of transactions per second, right? Of leverage trading, leveraged, staking and all that. So for Bitcoiners, what kind of things I think will be very interesting? One is the option side. It's like very important big market in the financial derivative. For Bitcoiners who actually don't like KYC, including myself, there's no real big solutions to do and buy put option or call options. Not everybody wants to use Deribit. Right? With all due respect, Deribit is a great platform, right? They got acquired by Coinbase, so they probably have a good future for the institution, compliant kind of user base. But would
you want these options to be denominated in Bitcoin or in dollar strikes? Just out of curiosity.
It's a good question. I think dollar strike is the number ones, right? There could be on Bitcoin. I'm curious how the design would look like, right? How to calculate the pricing and so on.
I
And
mean,
also
as
the
part
whole
of the Bitcoin economy, correct? Like, it's still puzzling how come that there is not, like you said, like a hyper liquid where just everything is denominated on Bitcoin, correct? And why that has not happened like in an effective way.
yeah, it
There are
happened.
projects working on that. There are projects.
That's good. There you go.
I think there's people working at that. We see some teams as well. I think in 2023 that everything was denominated with Bitcoin, right? But it was more NFT kind of thing with like floor price. The trading volume was low, the liquidity was small, the experience was bad, right? And it costs you quite a lot of money to mint and also trade, and also takes you minimum 20 minutes to finish the whole thing, right? I think, and people don't like that after a while, right? Like a lot of those garbage UTXO became zero. Nobody can actually sell and get rid of it, and after a while, and I think that's kind of how we see, new type of trading protocol needs to come in, right? The new frontier. I think option is got very good, interesting things. And the purpose, I think we have a very good DEX that's been growing. I think among the 55 million transaction we made since last year, we launched V1. Around at least 20% of those transactions come from those perps and so on. So we see that coming as well. I think I want to move back to about the yield side, right? I think we think for Bitcoin yield to be sustainable, it needs comes from the trading side. I think we've been kind of saying from a lot of people saying the same thing. Inflated token supply incentive, whatever point system, everybody kind of see the whole thing under the hood already. So whoever just copied that playbook and just keep minting the token and it just incentivize is not going to be the ones having too much adoption. And all the DeFi builders are also being very reasonable and also very, very careful about the yield they want to claim to provide to the asset allocator, right? So I think the expectation management is getting there. I don't really see too much Bitcoin whales expecting hurdle rate above 15% kind of thing, because it's just simply very difficult to achieve that. It's just like, very, very huge gap. So I think that's the education of the market in terms of the yield, supply, and demand is getting to an interesting, getting close to the interesting equilibrium. And then eventually we talk about the key important thing, which is elephant in the room, the economic risks, the protocol risks, and all kinds of bridging risks and all kind of things, right? For DeFi, right? For Bitcoin DeFi. So we kind of mentioned that different type of users have different risk appetite. We still encounter a few Bitcoin kind of people who don't want to take any risks, right? They don't want to do any bridging. They don't want to they don't want to let their Bitcoin get out of their wallet. They don't want actually anybody access to their Bitcoin positioning at all. It needs to be stay in their Bitcoin cold wallet doing nothing. That's not real TVL, but by the way, right, as well, right? So those are the type of people. But also on the counter argument, if you want looking for yield, let's say 5 to 10%, and why you want to take absolutely zero risks, it's basically you are looking for free lunch. In the finance world, there's no such a thing kind of free lunch, right? You're taking
correct,
right? You're taking absolutely zero risks, but you're looking for 5 to 10% sustainable way. There's no such a thing, right? And then
maybe the solution is to build risk underwriting, correct? Maybe on-chain risk underwriting, and then transforming.
There's things to fix that, which is called a on-chain insurance protocol, right? To kind of let people pay for the premium and cover some of the principal risks and some things like that. But they have to still pay. My kind of argument is like, while people are looking for yield and actually don't want to take any risks, they're looking for basically free lunch, right? So there's still people kind of think
you might not have risk on the principal, but you will have risk on the yield. So you're back to and you have exposure to a platform. So different levels. Yeah, I agree. It's like risk taking is what I was saying. It's like, it's not that you are not going to, I mean, some people is willing to take 9% yield on Bitcoin, but we know that there are no sustainable sources. I think what Charlie is mentioning, having a futures and option market, might be one. But again, how we make that work on chain, so you have full transparency. You know how the operator has limited control of the asset, of the underlying asset. There's a lot of things that need to be built, but yeah, definitely.
If we need to bring a yield to Bitcoin from active trading, we're there to help. But I like the idea.
Yes.
I like the idea. That's good. That's good. Yeah.
That's good. Yeah.
We have only 10 minutes to close. So I'd like to maybe give you guys space to give up, update on what's exciting and what's coming, on each of your protocols. Maybe give a brief overview of what are the exciting new either teams that are building on top or up and coming new initiatives that you're working on, so the community can engage. Maybe we can start with Jonathan, as we just discussed. Yeah.
Sure. Yeah, I mean, really happy to be here. So thanks for all the insights shared. Learned a lot today. So for Merlin chain, right, we are constantly pushing MBDC across different chains to make it sustainable, scalable, helping holders to find the best yield, right? Then next is we are always upgrading our AI agent tool. So right now our wizard is version 0.3. So we are looking at 0.4 for cross-chain
What's
transactions,
the yield?
more
What's
chain
the
abstraction.
yield now, Jonathan? What's the yield? What's the yield now? What is the range that we're talking about here?
I mean, Diego was talking about 3%, right? But you are looking at the range across other chain is potentially 4 to 5. You can't hit 10. But it depends on the market forces and the macro as well.
No, there you go. That's good. Sorry about that. Keep on going.
Maybe one can give a better yield options. Then next we are constantly pushing for, I would say, more liquidity on chain, as well as to push our native token to more centralized exchange and markets. So our Merlin token or MERL token is right now on Binance Alpha, and futures are pushing to other exchanges as well. So continuous effort, right, improvement, and to make more people be aware of Merlin chain. Yeah. So happy to share more. If you want, you can follow our Twitter.
Thank you very much for that, Jonathan. Charlie, you wanna give us some updates? Exciting
Yes,
stuff. What's coming?
sure. And first of all, great to be in this podcast. Great to sharing our insights. We made quite a lot of announcement last couple of weeks and announcements this year already. Upcoming weeks will be, really just comes down to the V2 mainnet, the BVM bridge launching. It's getting production mode already. It's fully tested out and audited. Really looking forward to get this shipped out and getting retail and also, institutional whale users to use it. And then obviously the Grass 16 verifier, the BVM implementation with our kind of, some optimization we finalizing. We want to launch it in the next 2 or 3 months. We aiming to really achieve this Bitcoin security equivalent rollup, not just sidechain, right? That's kind of the key vision, from day one, Bitlayer wants to build. There's quite a lot of a partnership, which is pretty exciting. We are aiming to announce that soon. The mining pool announcement we announced 3 weeks ago. Very looking forward to working with more, miners and mining pools. Institutional side, there's quite a lot of interesting idea. We're designing, we're working on the Bitcoin yield bearing ETP products. That takes time, but I think all this education adoption is one step at a time, right? Obviously, compared to Merlin and Rootstock, we are still kind of early stage. We have our own governance token to launch soon as well. The market is kind of in the middle land. We're not saying we this is the right timing to launch, but I think we're getting close to that. So we are also busy on that. Our community has been waiting for this for a while, but I think it's getting close. So stay tuned on that as well.
No, it's great, a great update, and I really wish the best on that next big milestone. What about you, Diego? You guys been working a lot of things.
Yeah, I think we have multiple fronts at the same time. I will try to synthesize. Yeah, to synthesize. Like on the technological side, we were the first together with another team to deploy like a bridge to Bitcoin based on BitBMX. BitBMX is this technology that enables Bitcoin to validate complex conditions. So in a way, it's the first time we have that capability. It started with BitBM, and Sergio Lerner, our chief scientist, created BitBMX. that makes it more, it makes cheaper to do that validation process, no? Because it's a multi-stage validation process that happens on Bitcoin. With that, we are launching the Union Bridge. That will be a bridge. It will be the safest way to peg Bitcoin to a secondary network, because in the current models, you need a federation where you need half of the members plus one to sign and to stay honest. With the Union Bridge, you will need one of M to be safe. So only as one of the signatories or federation members stay honest, the federation is safe. So that's a breakthrough in terms of interoperability with Bitcoin. Again, because I don't like to hype things just because it's like, this is a big breakthrough, but new technology on this level, deep tech, needs years, at least 1 or 2 years to get established and hardened. So, we will be the first, or among the first. We are like in the race with one team or two teams to have this in production. But of course, you are not going to deploy the full amount of Bitcoins that Rootstock have, the 3,000 Bitcoins that Rootstock have, into that peg instantly. What you will do is that you will do a test with maybe 100 Bitcoins, see how it goes, like open the bridge with certain levels of restriction. And then as it matures, hardens, I think people naturally will want to move from the current peg into the new one, because it's better and more scalable. That's from a technological perspective. Also, faster transactions. So validation on Rootstock will take around 15 seconds instead of 25 that it's taking now. Plus, there's a work in progress for data availability layer, so rollups can be done in a much efficient way. So the Reef rollup will be the first rollup we will launch, but the idea is that data availability capabilities will enable other rollups to build on Bitcoin infrastructure. And then from a user perspective, we have like 3 main initiatives. One is Rootstock Labs Institutional, that is helping institutional investors navigate the opportunities for Bitcoin yield in the Rootstock ecosystem. And what we were discussing is, I understand the risk appetite and the opportunities, and help them like navigate that and match and use the opportunities there. Then there is the Everyday DeFi. We have been working since inception. Like, that keeps growing. Money on Chain, that is the dollar backed by Bitcoin, has 150 million, I think, in TVL. The good thing is that we have in total around 400 millions of TVL, but it's all organic. There's no, that TVL has been growing steadily since inception, like year after year. So it's real TVL, not fake, it's like true hard money, people like putting their money there to do business. So I like that approach. As Charlie said, these things take time. It's like Ethereum took many years to get to a certain level of adoption. But I think we are ripe for growth, in that sense. So Everyday DeFi, lending for people in Latin America, in Africa, that is using these tools to protect from inflation, to get loan Bitcoiners, like small Bitcoiners, because the institutional solutions are for medium to big Bitcoiners. So small Bitcoiners that wants to, instead of selling their Bitcoins, get a loan in dollars for short-term needs. That's happening already, and we keep like integrating this into different wallets, into the main wallets in Latin America, Lemon, Ripio, Buenbit, to make these solutions, these protocols and solutions reach to the end user. And the final one is the Reef part, where we are focusing on developers, builders. So the Reef ecosystem has the Rootstock Collective, which is a great tool. It's a DAO where all the builders on the ecosystem, interact with the community, and there's grants and solutions so they can like experiment. Because of course, like, you need that experimentation phase where you are building the solutions that will scale the ecosystem in the future. So that's where the Reef ecosystem is growing and being developed. So that's a little bit the shortest thing I can do. but
That was quite a lot, but it does give us very good insight. In any case, thank you very much for sharing all the insights and helping us understand a bit better about the Bitcoin ecosystem. Thank you very much for your time, and I'll let you guys have a very good day.
My pleasure, and thank you for inviting us.
Thank
Thank
you,
you very
Diego.
much.
Thank you, Charlie.
guys.
Cheers. Have a good day. Thank you very much.